Welcome back, dear traders. It's me, Kate Stihina, and you are watching a recap of the Asian session. While investors analyzed the comments of Fed officials yesterday, stock indexes dropped due to market uncertainty. And this is why cautious sentiment prevailed in the Asian stock markets. As widely expected, the Fed raised the key rate by 25 basis points yesterday. Ahead of the meeting, the Fed Watch tool showed that almost 89% of investors had already factored in such a move. For this reason, traders were mainly focused on Jerome Powell's comments on future plans for monetary policy and Janet Yellen's statements on the banking crisis. And the Fed chair said yesterday that the regulator was ready to raise rates even higher than expected. For investors betting on a dovish reversal in March, these words came as a really unpleasant surprise. Jerome Powell said that the market is getting it wrong when it prices in rate cuts later this year. The Fed will stick to monetary tightening until inflation runs steadily at 2%. It applies at least one rate hike. In addition, the central bank will continue to reduce its treasury bonds and mortgage-backed securities. Tighter lending conditions could lead to an outflow of funds to developing Asian countries. Against the backdrop of these contradictory comments, Asian stock markets are trading without a clear-cut trend. The hint at a pause in monetary tightening is not bad news. However, traders are worried about the stricter lending conditions after the recent collapse of three medium-sized U.S. banks in 1 week. Apart from that, Treasury Secretary Janet Yellen added fuel to the fire, and she told lawmakers that she was not considering the possibility of a full insurance of bank deposits. The US dollar strongly reacted to the Fed meeting. Usually, it rises following hawkish remarks. As seen on the chart yesterday, it sharply dived down. On a Thursday morning, the US dollar index broke through the support level of 102 points, gradually declining. What was the reason for such an odd reaction? Jerome Powell believes that a soft landing is still possible. It seems that traders have already priced hawkish statements, and this is why they had no effect on the greenback. The US dollar may also lose its safe haven currency status if the banking crisis worsens. Powell assumes that it's still too early to talk about its impact on the US financial system. The US dollar index plunged to a 7-week low due to market uncertainty. In the Asian session, it was moving in the downward range of 101.90 and 102.50. Although Jerome Powell is confident about the stability of the banking system, and the US dollar could reach new lows in the coming days and even weeks. The yen, on the contrary, is likely to cement its safe haven currency status. US government bonds lost momentum, logging the biggest weekly drop following the Fed meeting, and this is always a bullish condition for the yen. It tried to break through a 6-week high located below 131 points on a Thursday morning. The dollar-yen pair performed a corrective rebound in the range of 130.40 and 131.50. To ensure further upward movement, bulls need to push the pair to a 2-week resistance level of 131.80. If so, the pair may approach 130.50, and the peers may regain the upper hand only if the pair grows to 131.80 and above. This scenario looks likely today, as the latest report showed that the Japanese manufacturers' mood soared, especially in export industries. Meanwhile, the bulls took control of the AUD-USD pair. It was moving in the upward range over 0.6680 and 0.6756. During the Asian session, it hit 0.6730, edging higher. However, in general, the upside potential looks limited. Its growth is mainly driven by rising oil prices, a strong yuan, and the Chinese market. And these drivers are not relevant today, given that the focus is on the results of the Fed meeting. And this is why it will be rather hard for the Aussie to break above the resistance level of 0.6760. The New Zealand dollar also has weak bullish momentum, especially after the steep fall in the yuan below the 5-week low. A drop in the yuan, which acts as the liquid proxy for commodity currencies, exerted pressure on the Australian dollar. And the Reserve Bank of New Zealand also made rather pessimistic statements. The regulator believes that the 450 basis point rise in the rate over the past 18 months was still percolating through the economy and would likely further weigh on the consumer spending. After a jump yesterday, the Kiwi dollar pair showed moderate growth in the morning. It consolidated in the price corridor over 0.6220 and 0.6296. Trading at 0.6287. Cautious sentiment prevails in markets. Perhaps the situation will change drastically after the Bank of Japan and Swiss National Bank meetings. For instance, the yen may appreciate following the rate decisions. As a strong safe haven asset, it appeals to investors in times of a banking crisis. That's all for now. Please leave your comment down below and don't miss our next video review. See you soon!